Welcome to Apartment Dynamics from MPF Research. He's Greg Willett. I'm Jay Parsons, and today we have for you one of our more popular features, a look at the National Rent Growth Leaderboard. Among the country's large markets, which notched the biggest jumps in effective rents for new leases in 2013. So Greg, get us started here. Let's run through the list of the top 10 performers, then we'll circle back and make some comments.
And again, jump right to that list. Here's the graphic for you. And tightly packed at the top of the list, with 5 metros recording 6 to 7% annual growth in effective rents for new leases. And tie right at the top. Both Denver, Boulder, and San Jose are in the #1 position with effective rents up 7% even over the course of the past year. Next up, Oakland and Portland tie also at 6.6% annual growth, and then San Francisco saw rates rise 6% even.
And rounding out the top 10, we've got Seattle with rents up 5.5%, and a couple of markets in both Florida and Texas. Rents climbed 5.2% in Miami and 4.9% in West Palm Beach, while rental rates were up 4.8% in Austin and 4.4% in Houston. So Greg, what's a key takeaway from this list as you look at it?
And looking at these numbers, I'm going to start right at the top of the list and talk about Denver. Denver is a market that we really like. There's lots to love here. And we were very optimistic about this one going into 2013. But, you know, maybe it is a little bit surprising to see it all the way up there at #1. And particularly given the fact that there is a lot of construction activity going on here. And the lesson learned from this one is smart operator behavior makes a really big difference. And there is a lot under construction in Denver, but it hasn't really hit yet. And so as we go into 2014, this is one you're going to have to slow down rent growth. I mean, it's pretty inevitable, but don't do it until you have to do it. And it's a market that is really tight right now, and there's really not room to buy any more occupancy with conservative rents. And so it doesn't make sense to slow down on rent growth yet. So they haven't done that in Denver, and that's a contrast to what we see in some other markets where new supply is on the way, and they started pulling back on the rent growth too early. So shout out to the Denver operators, and let's throw Austin on that list as well. Another one where it's the same sort of story, but they're not cutting back on the rent growth until they absolutely have to.
Let's move a little further west. I want to pinpoint San Jose, San Francisco, and Seattle. It's been interesting to see some of the panic about rent growth prospects in these markets as deliveries have been kicked up or to aggressive levels, at least by local standards. There was even a report by a local source in San Francisco in the past few days that said rents could drop there by 5 to 15%. And from our perspective, that is just not going to happen. In fact, while we're predicting that all 3 of these markets will see rent growth levels slow in 2014 compared to what they did in 2013, they still end up on the list of the top performers in our minds for 2014. And what some are missing in the storylines for these markets is that the wave of new supply in San Jose, San Francisco, and Seattle, it's already started. We've seen some big numbers in 2013, and so when you look at what's going to happen in 2014, the numbers aren't getting that much more significant. And so the pent-up demand for new product is really what's helped drive demand and rent growth in these markets so far to date. And these areas should be in great shape, even if they lose a little bit more momentum with a little bit more supply coming online, but certainly shouldn't take that big of a hit.
Yeah, again, these look like still strong performers as we go into the next year, as do those 2 Florida markets on the list. And so looking at Miami and West Palm Beach, both had really good growth. These have been really tight markets for quite a while, really full on the occupancy side. It was only recently that you saw rent growth really kick into the next gear, though, and what had been the story, some competition from that shadow market rental product holding it back, but we've pretty much burned that off now in these 2 spots, and really some other parts of Florida as well. And if you looked at some of the smaller markets there, you've recently done a video on Fort Myers, Naples, and Sarasota, Bradenton, and in fact, they're doing better on the rent growth front than Miami and West Palm Beach. So again, we've burned off that shadow market product. We started to build condos again in Florida, and over time, we're probably going to build that shadow market back up again. But there's certainly a window here that I would say conservatively 2 to 3 years where these look like some of the better performers across the country in Florida.
Hey, Greg, let's touch on some markets that just missed the top 10 list for rent growth in 2013. And I want to start off with probably the stunner for all of us, and that is Atlanta. Atlanta saw rents jump 4.3% in 2013, and on top of that, Atlanta also saw occupancy climb 60 basis points, whereas most other rent growth leaders on this list saw occupancy that was either flat or declining slightly. Now, of course, part of that is that Atlanta is a late recovery market that's just now starting to do what other markets did in 2011 and 2012. But forgetting all that, the big question is, can Atlanta sustain this momentum? And the naysayers will point to Phoenix and say that Phoenix was posting really good rent growth for about a year or so during the recovery process, but then lost a lot of steam as more renters started to buy housing or move into single-family rentals. Obviously, a lot of that in both of these markets. But the pro-Atlanta crowd will point out that Atlanta is different from Phoenix and that it has a much more vibrant and active and larger urban core than does Phoenix. So there's a lot more urban renters who aren't going to be moving out to the suburbs to go buy homes or to rent single-family homes, and who, regardless of what happens with the pricing, will choose for lifestyle reasons to stay within the urban core submarkets. And the other thing that's a little bit different about Atlanta to some degree is that it's a little bit harder in some of the key suburban areas. It's a little bit harder to move from an apartment to a single-family home, either purchasing or rental, in the same submarket for the same pricing that you're getting for the apartment market. So while overall single-family homes, both sales and rentals, are certainly very cheap in the Atlanta metro overall, there are some key Atlanta suburban submarkets that we think should continue to post some pretty good rent growth, at least for the next couple of years.
I like in that one. We present both sides of the argument, but don't really pick one. That this is a hard market to analyze in terms of what's going to happen in Atlanta. So we shall see. And we're picking a kind of middle-of-the-road stance there. Looking at some other ones that were really close to that top 10 on the rent growth performances, and these are stories that we've told actually several times in the past year. I'm just going to hit them very briefly again. Fort Worth came in with annual rent growth of 3.9%. That's part of that middle market story that we keep hitting on. Fort Worth is a very disproportionately heavy middle market apartment stock, and so that means that it's performing very well overall. Nashville's rent growth figure for 2013, 3.7%. That one's an easy story to tell. Really strong economy, very good and consistent job growth. That means that even though they've actually kicked up construction activity somewhat, they're doing a great job of absorbing that and keeping the rent growth number really healthy. And then finally, at 3.6 annual rent growth, you see both Orange County and San Diego. Again, we just did a video on the Southern California markets, and there's the overall pattern of what had been previous laggards, then caught up to really the U.S. as a whole, and now Southern California seems to be mostly positioned to slightly outperform the U.S. in the coming year or so. So a little bit of movement there.
So that wraps up our storylines on the top performers for rent growth in 2013. A lot of these markets we just talked about are also on our list for top performers in 2014. Like we said earlier, it should be a little bit of a slowdown in certain markets due to supply, but certainly we're still expecting some pretty healthy rent growth numbers in most of these spots. So that wraps us up for this episode. So until next time, for Greg Willett, I'm Jay Parsons. Thank you for watching Apart Market Dynamics.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.